Some big White House personnel news from President Trump as the weekend came to an end. The president tweeting last night, Kevin Hassett, who has done such a great job for me and the administration, will be leaving shortly. His very talented replacement will be named as soon as I get back to the United States. I want to thank Kevin for all he has done. He is a true friend. Joining us right now is the man himself, White House Council of Economic Advisors Chairman Kevin Hassett. Kevin, it's great to see you this morning. Thank you for being here.
Of course, yeah.
We're sad to hear that you're leaving. You've been
me too.
who's always come on with us since before you had that job. You've been there as the head of the CEA since September of 2017. So it's a little less than 2 years, but you are one of the longer-serving people in the administration. Right. I realize it's a tough workload. There's a lot that goes on. But with the announcement of these Mexico tariffs coming just last week, a lot of people wondering, is that why you're leaving?
Oh, no. I mean, this is something that's been in the works for a little while. And actually, I've been there for almost exactly 2 years because before I was confirmed, I started to work as a consultant in the White House. And so I started the 1st of June or something like that about 2 years ago. And if you look at the history of the CEA, it's very normal for the CEA chair to move on after about 2 years. And I think it's really quite healthy for the organization because the CEA is supposed to be this objective economic body, rather than a political animal. And I think the longer you stay in the White House, the closer you get with everybody in the West Wing, the harder it might be to be objective. And so I'm, as you know, a student of CEA, and I think it's really a good thing that, President Clinton had, I guess, 4 CEA chairs. I think President Bush had 5. President Obama had 4. I think that's about the right pace for the job.
So, but why do you want to leave?
Oh, I think that it's really partly respect for the institution and the sort of normal 2-year role. And then there's also just wanting to go back and spend time with my family. I've got a youngest kid who's going off to college in a year, wouldn't mind seeing his senior year, things like that. But, it's absolutely just normal circle of life kind of stuff.
Kevin, you mentioned being in a position for too long and maybe getting too close to the administration. Does that mean you are now looking at things like the tariffs as a positive? Because that's not something I would have expected of you 2 years ago.
I have, as the president's tweet suggests, we've grown very close. We work closely together. I was in the back room with him talking about the departure, and we were both pretty sad about it last week. I mean, the departure question and the tariff question are just different questions, and I think it's appropriate that we just separate them.
That's fine. Let's just ask the tariff question then.
Okay, yeah, sure, go ahead. And by the way, I'm going to be around for another month or so, and I'm happy to come back on the show between now and then and talk about data or whatever else.
You're going to kiss and tell. You're going to say, I used to steal things off his desk so he wouldn't see him, and you got some spicy stuff that you're going to come out with in a couple of months. I don't see that from you for some reason.
Yeah, no. And in fact, I don't really know if there's much spicy stuff that I've noticed over the last 2 years, so I don't think I'd really have anything in that angle to sell. Sorry.
There's a very talented and intelligent guy going to replace you. It's not Larry Summers, is it? Do you know? Have you...
I think I can confirm that it's not Larry Summers.
You can't confirm it.
Can you give us a hint, though? But do you know who it is?
No, but can I just say that, the CEA has, a staff of maybe it can get up to about 50 if you count interns, and there are a whole bunch of people that are economists that come from all over the country to work here for a year or two. And we've got like a full stack of people lined up for next year, and so the CEA is going to be fine. It's kind of like, I'm the special teams captain of the Patriots, and I'm moving on, but there's still the Patriots, and they're going to be fine.
All right. Well, Kevin, let's talk about the latest tariffs, threatened tariffs against Mexico. What do you think of them?
Well, I think that the president is dealing with the immigration crisis that I think he appropriately terms a crisis, and he's serious about trying to get the Mexicans to the table. They have a list of material things that the Mexicans can do that it's a little bit puzzling that they haven't been doing, and I'm really heartened to see that they're coming to town to talk about that. I think it's very manageable for the Mexicans to fix this problem, and I think that's one reason why the president decided to try to get them to the table.
Are you a fan of tariffs being used for something that isn't really an economic problem?
Well, I don't give advice about things like border security, but I could say that, if you look, the Mexicans are at the table.
Kevin, one of the questions that Steve Leisman had asked earlier today was, have you done any kind of economic study or report on the impact of these tariffs for the president or even for your own group?
Well, I can't talk about what I do or don't do for the president, but I can tell you that whenever there's a decision that the president's made, and that I'm involved in it, and I definitely was involved in meetings where we were talking about this, then, costs and benefits for whatever the policy is are presented to the president.
Can you walk us through the economic impact as you see it?
I think that big picture, that right now we're hoping for, positive talks. And
right.
I think that if you look at what happens...
I imagine somebody says to you, if this is prolonged for 6 months, if this is prolonged for 12 months, this is the impact on the U.S. consumer, this is the impact on GDP. I assume I hope somebody's done the math on this.
Yeah, I don't want to talk about what I have or haven't talked to the president about, but I can say that if folks out there are tuning up their models to really work on it today, I think that one of the things you see is, especially in the near term, the impacts are much larger on Mexico than on the U.S. And I think that the intent of this is to solve a very, very important problem that the president's focused on, and I'm really heartened to see the Mexicans are coming to town to talk about it.
And right now, the likelihood that a week from now that they go on, do you think that's 90%, Kevin? You think it's 50-50? I mean,
I'm not going to give a percent that I think. I think that if you look at currency movements and tariffs, that you can model what the market thinks, and the market definitely doesn't think that it's guaranteed that they're going on right now.
The market does not think.
The market does not think that.
They're. One of the criticisms is all that hard work that you work, you blew in the face to get tax reform and deregulation. If the president thinks, well, I've got sort of some money to work with, and I'm going to solve some of these other problems because things were going so well in terms of, I don't know, stock performance had been pretty good until the last 6 weeks or so, and GDP, unemployment, things like that. Do you agree with that assessment that I'm going to fix some other problems because I've got some leeway economically, or is it make no sense to reverse all this progress that's been made by putting the two separate issues together?
Well, once again, first quarter was 3%. Right now, real-time estimates of the second quarter are that they're in the 2s, and it's kind of a normal ebb and flow of inventories and trade, I think, that's causing that slight blip down. And so the fact is that we're still looking at about a 3% momentum going forward for the year. And the upside for that is that we reform our trade deals. And the OECD put out a study about a year ago where they suggested that there could be a big positive impact on growth if we could actually move forward with the deals. Now, I know that we're all disappointed with the fact that the Chinese talks got very close to the finish line and then stepped back a little bit. But I still think that the idea of trade reform is a really positive one, and the president's right to emphasize it in the trade space.
Did we backtrack on anything? Or what do you still? I mean, do you know of anything that the Chinese are now saying that we pulled out at the last minute with some key provisions? Is there any truth to that, or is it?
I'm hopeful that at G20 that the president will have a chance to address that with his Chinese counterpart. And I think that when there are negotiations going on, then sometimes people get surprised at how adamant Joe is about this or that, and so I think that in the end, our sense was that they were pulling back from things that they had agreed to, and I think we'll stand by that view. But negotiations are tricky business, and I think that it's right for them to try to proceed forward now without necessarily hard feelings.
What's your forecast for a recession? Is it likely next year? A lot of people are coming to that conclusion, and the bond market seems to at least be a red flag that could be a possibility. What do you attribute? What's going on in the bond market, and then answer about the recession?
Well, first, I think that if you look at real-time recession indicators that don't use interest rates, and Marceli Chauvet, Chauvet, has something at the St. Louis Fed that's a real-time probability of recession indicator that I use all the time, and that's really right at about 0, which means that the odds of a recession, I think, going forward this year are pretty close to 0. If you're looking at the data. But if you look at the interest rates, of course, those models can be probabilities that are north of 0.5. And so it is something that we're puzzling over. And I think that part of the problem is that there's kind of a global deflation setting in because of a weak economy in Europe and a weaker economy in Asia, and that global deflation is putting downward pressure on medium-term interest rates and creating the yield curve inversions that are setting off the alarms in these models. And so I think that if you think that the European slowdown is going to spread to the U.S., then that would follow. But we have so much momentum here in the U.S., and we're seeing strong income growth, strong output growth, high capital spending. I just don't see the European slowdown spreading to the U.S. right now.
Kevin, if that's the case, why do you think the Fed funds futures are now basically baking in a rate hike this year and potentially two?
Rate cut.
I'm sorry,
rate cut, yeah.
Rate cut this year and potentially two.
Well, I'm not giving the Fed advice. I haven't done that.
I know you don't like to give Fed advice, but the market is seeing something a little different than what
I might give them advice in a couple months. I don't know. But right now, I think that the fact is that if you look at inflation, it's really tame and probably headed south. And so what markets are thinking about is probably something related to inflation.
Kevin, just watching other issues, what numbers have you been watching most closely recently? Because there is this feeling that we've almost got two economies. Some numbers that come in really strong, other numbers that surprise us. What numbers do you think are most important to be paying attention to right now?
Well, I think that the thing that we're all waiting for is, and gosh, how many times I've been on your show on Jobs Day, right? This is a really big jobs week. I think that there have been some numbers, like the durable goods numbers, that were headed in the wrong direction a little bit last month. And yet the jobs numbers and the initial claims and even the wage data are all sort of headed up. And if you're thinking about reasons for optimism for the rest of the year, it's that when incomes are high, consumption follows. And so that there's a lot of sort of, I guess, a safety net underneath consumption as long as incomes continue to grow. And so I think it's going to be a big jobs number, given that there's a lot of uncertainty about the path of the economy over the last month, because there have been, as you said, some pluses and some minuses in the data.
We've still got the rest of the week before we get to that jobs number, but what would you be banking on in terms of what kind of numbers to expect?
Oh, I think that, probably the consensus is in the 150 to 200 range, and we'll probably adjust that when we see the ADP and so on. But yeah, I'm looking for something in that range. And I think that if we get that, then we can have a lot of confidence that the momentum that we've seen so far this year is continuing.
Oh, Kevin, want to?
Yep. When's your last day exactly?
It's one of those things. I'm a space cadet, so but it's the end of June, something like that.
End of June, and you'll come back before then.
Of course,
you go to Disney World in July. And
then you could become a CNBC contributor.
Are you going back to AEI?
Right now I don't have any firm plans for what I'm doing next. So.
Well, we hope you'll continue to join us on Squawk Box. We always appreciate
that. I can promise.
Did the president ask you who should replace you?
I can't talk about that. Yeah.
That means yes.
That means yes. Was there a specific person that you?
You're not going to get
that means yes.
Get nowhere. All right.
Kevin, thank you.
Thank you, guys.
It's great seeing you.